the weekly newsletter for the 9th of December 2008. This week I just want to have a quick look at some of the economic concerns that are currently facing our market. Our market is trading in a bit of a sideways pattern at present, coming off its lows of last month, and we're looking for it to move towards 3,900. Now, the economic data coming out last month showed that retail sales were down 1%, housing fell 1.8%. This is in the third quarter. This is the largest fall since 1978, and car sales are down 22% this time last year. The government have also used up most of their surplus in stimulation packages. Reserve Bank has cut rates by 1%, which will affect their further use of the monetary policy, and job ads are in decline in the newspapers, which has indicated unemployment is about to rise. Now, we also saw last week that Qantas and British Airways look to merge in a bid to save costs. Rio continues to fall on concerns at the debt level and ability to repay, and Rio stock closed around $33 last week, where 8 months ago it was trading $155 a share. Now, this really lost this much value in 8 months. Their operations haven't shut down. They're still selling goods overseas, and they're not going broke. So what's my point about all this concern? Look, the market will continue, and good quality companies will still be there in 5 years from now. The world economies will not fail. People are scared at present, and for good reason. Look, your house is worth less, your shares are worth less, your super is worth less, and your job is not as secure as it was 12 months ago. However, to get through this situation, get through this economic times, the key is simple. It's education. Understand what is happening now and how it will affect you is the key to surviving any crisis. Next is knowing what to do and how to protect not only your investments, but how to grow your investments during these conditions. And the final step is taking action. Now, on that point, what I'd like to leave you with this week is 8 simple rules on investing in a bear market. First, borrowing. It's not a good time to borrow in a bear market, mostly because your investments will be negative geared. Now, negative gearing is not a good situation in any market. A couple of things you can do is stay away from margin loans. Look to lend against your property if you want to lend, or look at warrants if you don't want to lend against your property. Margin loans have high interest rates and obviously the threat of margin calls, so stay away from those. Now, cash, it's also good to hold cash, but don't fall in the trap of putting all your assets in cash. You will miss the upward movement in the market when it comes. There are good stocks. You want to make sure you outperform inflation and get a good return. So look at stocks like your banking stocks or bank preference shares, paying a high yield of around 8% to 10%, and they will get the growth over the 5-year period to outperform inflation. Also, dollar cost average. Put your money in slowly into the market. Look at what shares or managed funds you want to buy, and when they dip, buy a little bit and just keep tipping in over the next 1 or 2 years. As I mentioned before, education. Now's a good time to learn about what's happening in the marketplace and know how to deal with these issues. Now, at one point in education, do not turn to the media, newspapers or television, and even if you turn to the internet, be very careful. Anyone with a computer can put things on the internet. Make sure it's backed up by real research. Check out books or get some courses under your belt to see what's happening. Finally, a couple other issues. Recovering losses. Don't try to claw back your losses straight away. The sensible approach in a poor market is to recover losses faster if you take a steady approach to it. Panicking and looking to double up is an old gambler's trick, and generally you go home empty-handed. 6, panic. It's pointless activity, panicking, so please don't panic in this market. Education will stop you doing this, and if you are feeling a little bit panicked, make sure you contact your advisor. If they can't help you, contact us. We'll help calm you down a little bit and educate you about what the market's doing. 7 is live normally. Cut back on some of the spending you're doing, like new cars, overseas holidays, boats and bigger houses, but don't sit at home worrying about the market. Get on with your life. The quicker you get back in the routine, the quicker the market will seem to recover. Most likely you won't even notice it when it does recover. And 8, and most important, ask for help. Now, many people have made ill-informed decisions in a bull market or are very much panicking regarding their financial situation. Make sure you ask for help. Go find an expert like ourselves. Now, we don't have a magic fix, but we can improve your position due to our understanding of the markets and the products within it. So give us a call if you have any concerns, or check out our website at growyourwealth.com.au.